Investors take their time on endowing money and effort on businesses they see flourishing. Crypto technology is one of these thriving ones, which made businessmen flock around this area of expertise. Learn how to join and make the most of it by investing in stocks. Seeing that this is where their currencies lie, what makes them scared to risk this? Crypto winter is by far the scariest event for investors. What fright does it give, and what does it exactly mean? Let's learn what this occurrence is all about and how we can face it off. Hello, and welcome back to the channel. This is CryptoNow, and we're back with another incredible video. So please subscribe to the channel and enable alerts to be notified for each new upload. There are instances we cannot control, such as nature. We can never stop an earthquake, typhoon, or weather conditions from happening. Winter is a season which is considered to be the coldest and most risky to life of the 4 seasons given to us. We can't prevent it from occurring, but we can be ready for it when it comes. And for today's video, we will be talking about everything there is to know about crypto winter. Winter in crypto. Winter brings colder weather, occasionally snow and frost, no leaves on the trees, and the quantity of daylight all throughout the day is at its smallest. How could this be associated with crypto? And what exactly is crypto winter? This terrifying term refers to a sudden plunge, followed by a reduction in trade and months of market stagnations. A phenomena that struck the cryptocurrency market in 2018. This started at the end of 2017 to the end of the next year, where Bitcoin's price fell by more than 80% to as low as $3,100. A period marked by the boom and bust of initial coin offerings and several major banks abandoning plans to open cryptocurrency trading desks. The world's largest cryptocurrency has dropped by half after reaching a peak of around $69,000 in November. The crypto world has lost over $1 million in market rate as investors become increasingly convinced that the Federal Reserve will begin to withdraw the sleek policy settings that fostered the risk asset bubble. This is why investors fear this happening again. Winter is cold and the temperature goes down. And this also happens in crypto as all currency goes down. These past few years, Bitcoin has regained everything it has lost and more. It is even coming up in line to defeat the value of national currencies. However, the phenomena that happened in 2018 will go down in history. This is why investors tend to be scared of this and are cautious for it to not happen again. However, unlike the winter back in 2017, funding in the crypto sphere is still strong, at least for the time being. In only the month of January, blockchain FTX announced the formation of a $2 billion strategic investor to target Web3 prospects, while the Financial Times claimed that Andreessen Horowitz is working to raise $4.5 billion for digital investments. Of course, a lengthy downturn might dampen excitement for the industry. There are theories that suggest that the winter will not happen again, but there are also some who have speculations that it is about to occur once more. Which of these says the truth? Before the latter part of this video, which talks about the findings of this year's currencies, we would like to know if you have also invested in Bitcoin. If so, what is your speculation on this matter? Let us know in the comments. We would be happy to know your insights. Good day, mate. We've made it halfway through our list, and we sincerely hope you've enjoyed it thus far. If you have, please give us a thumbs up and turn on notifications to be notified of new uploads. Going on to the second part. Is it winter? Bitcoin, the world's most valuable virtual currency, momentarily fell below $33,000 on Monday, reaching its minimum value since July. It has subsequently rebounded beyond $36,000, but it still dropped almost 50% from such a historic amount of almost $69,000 in November. Considering this, is it enough to say that winter is coming? Maybe not, but this has prompted some crypto investors to speculate about the potential of a crypto winter, a term referring to prior bear markets in the market's short history. The most recent example occurred in late 2017 and early 2018 when Bitcoin fell by up to 80% from all-time highs. Dealers are concerned that prospective interest rate rises and aggressive monetary tightening by the Federal Reserve may deplete market liquidity. The Federal Reserve of the United States is considering such moves in response to rising inflation. And some analysts believe it could signal the end of the era for ultra-low interest rates and sky-high valuations, particularly in high-growth sectors like technology, which benefits from lower rates because companies frequently borrow funds to invest in their businesses. The decline in the value of major digital coins has benefited stablecoins, or digital currencies that mirror the value of sovereign currencies, such as the US dollar. According to CoinGecko statistics, the market value of USD Coin, the second largest stablecoin, has increased by more than $5 billion. The news says that Bitcoin has often witnessed blow-off high before falling by 80% or more. This is a chart pattern characterized by a strong surge in price movements, frequently accompanied by a sudden drop in price. Nonetheless, investors are concerned about the possibility of more government clampdown on the crypto business. Last week, Russia's central bank suggested a ban on cryptocurrency usage and mining, mirroring a similar action by neighboring China. In addition, the US government is apparently planning to reveal a crypto regulation policy as early as next month. Face the winter. We will give you 5 tips on what to do if crypto winter ever does come around. First, you will need to stack more coins in your account. When there's excitement all around the market, you should prevent being pressured to stack cryptos. Then, after the frenzy has subsided, you may now safely stack your preferred cryptos. It's a great opportunity to use the dollar cost averaging method even during a crypto winter. The goal here is to wind up with more cryptos, in terms of quantity, not value, when the new bull market begins, exceeding the amount you had in the previous cycle. Second, you need to know what the next trend is. There's a lot to learn about cryptocurrency. Despite the bad market, blockchains would continue to work, DeFi operations would continue despite fewer people, and developers would continue to send out improvements. The bull market, no matter how terrific it seems, frequently distracts. Third, you must trade the range. You can think of crypto winter as a protracted time of boredom with minimal transaction activity, which might be unpleasant for traders. The first year after the first winter was a successful one. It demonstrates that, even during a bad market, some amount of volatility exists, but not to the same extent as in a bull market. You can take advantage of the sideways market by trading the range. It's vital to remember that this statement only applies to people who have greater market experience. Fourth, be active in decentralized finance, DeFi. A lot of investors are whining about rising gas prices at the height of a bull market. That will not be an issue during a crypto winter. However, you can turn it into an opportunity by engaging in DeFi initiatives without being deterred by excessive petrol prices. Staking, packaging BTC, and lending some coins to a liquidity pool are just a few examples of operations that provide insight into how DeFi operates. During a bad market, you can have time to work on other projects that demand greater dedication, such as studying Solidity, ETH programming language, or maintaining a modest mining rig. Winter can actually lead to having more time on your hands. The last tip is to do DeFi staking. Staking is a practice in which you deposit your currencies in a DeFi project in exchange for interest. It's one way to generate passive revenue from your present and unused coins. Staking is an excellent concept for those who wish to navigate through crypto winter comfortably and finish up with more cryptos. Aside from just buying more, it's one approach to expand your portfolio. Staking involves less risk. You will not have to contend with ephemeral loss. It's also a terrific option for those who don't want to trade. Above you have the things to do during a winter in crypto. Winter may be coming or not, but always remember to store in enough heat for you to survive no matter how cold or dark the seasons may come to be. Some things will not work out for you, and some plans may fail because of certain circumstances. So have an alternative and be mindful as to where you put your mind these days. Currency loss can be regained if you play your cards well. That concludes today's video. Please subscribe to the channel and enable alerts to be notified of new uploads. This is CryptoNow, and we'll see you in our next video. Let us know what topic you want to be highlighted in our next update. We'll be waiting for your response.